Welcome, everyone. Thank you for tuning into today's Navigating Tax Update. Today's update is focused on the evolving latest developments in remote work and payroll nexus rules across United States, especially in 2024 and 2025. To guide us through these developments, we're joined by Scott Brawdy, tax principal at Honkamp. Scott leads our state and local tax practice and has more than 25 years of experience advising businesses across industries and navigating complex multi-state tax issues. So, Scott, remote work is shaking up taxes. Can you break down what Payroll Nexus is and why having remote employees can complicate things for businesses?
Sure. Since COVID-19, remote work has gone from a perk to more of a permanent fixture. And as of mid-25, nearly 80% of remote capable employees work either hybrid or fully remote schedules. But with this flexibility comes complexity, especially when it comes to state tax obligations. If you think about the concept of nexus, for example, nexus is a connection between a business and a state that allows the state to impose tax obligations. And traditionally, nexus was triggered by physical presence, like having an office or employees in the state. But now, remote employees working from home can create nexus, even if your business has no other ties to that state. And here's what's changed lately. With payroll tax withholding, if your employee works remotely in a different state than your business, you may be required to withhold that state's income tax, even if you don't have an office there. During this time of uncertainty, the IRS clarified that in 2024, the income must be taxed in the state where the work is physically performed, not where the employer is located. While some states like California and New York have strict rules, others, like Utah and Louisiana, offer relief if the employee works in the state for fewer than 30 or 60 days. And for corporate tax nexus, remote employees can also trigger a filing requirement for the corporation or partnership or other entity. If an employee works in a state for more than 30 days, your business could be subject to that state's corporate taxes.
Okay, so what exactly does this mean for businesses?
Well, what it means is that you might need to register your business, file returns, and pay taxes in multiple states just because of where your employees live and work. And on the payroll side of things, some states often require employers to pay unemployment insurance based on the employee's work location. And don't forget local taxes. Some cities and counties impose their own payroll taxes, adding another layer of complexity. There are reciprocity agreements available. Some neighboring states have reciprocal agreements that simplify things. For example, if you've got an employee living in New Jersey but working in Pennsylvania, that employee could pay taxes only to their home state. But states like New York and Connecticut don't offer reciprocity between each other, meaning employees may need to file a return in both states. There are safe harbor rules. The IRS introduced these provisions for short-term remote work. And if an employee works in a state for fewer than 30 days and the employer makes good faith efforts to track and correct withholding, penalties can be waived.
Okay. Scott, so for businesses with remote employees, what practical steps can they take to make sure they're staying compliant with payroll and Nexus rules?
I think there's three things a company can do right away to help mitigate the risk involved in this area. First, they can track employee locations by using software or internal systems to monitor where your employees are working, especially if they move or travel frequently. You want to go ahead and review the state nexus rules. Each state's got its own thresholds and definitions, and some use bright line rules while others assess nexus case by case. Finally, given how difficult this is, you want to consult a tax advisor who is skilled in multi-state taxation. It's essential to work with professionals who understand these issues, especially around those in payroll and nexus compliance. Remote work is not going away. We're going to have this for the near-term future at least, but so are the tax implications. By staying informed and proactive, you can avoid penalties, reduce audit risk, and keep your business running smoothly.
Okay. Well, thanks, Scott, for sharing your insights on this important topic. That does it for today's Navigating Taxes update. If you have questions or want help navigating remote work or compliant, reach out. We're here to help.
I'm Scott Brawdy. Stay flexible, stay compliant.